First Property Group. Hi, Ben.
Hi, Mark.
How are you doing?
I'm very well indeed, thank you. How are you?
Yes, I'm doing good. I'm doing good. I've recently emigrated to the Netherlands, so I'm currently calling from The Hague in the Netherlands. But I believe so. You last time we spoke, you were in you were back at work, weren't you?
Yeah, I'm still back at work.
Yeah.
I'm working from the office every day.
Uh-huh.
Um, I think that I've got to be in the office.
Mm.
Someone's got to, be here to, apart from anything else, pay checks and stuff.
Yeah.
Um,
And what's London like
but
then?
well, London's not as dead as it was in the first lockdown. I think
Okay.
schools being open gives it a bit of vibrancy,
Hmm.
and I'm very pleased to see that the local coffee shops haven't closed for takeaway business like they
Yeah.
did last time.
Yeah.
So I think people are giving it a better swing of the bat. But, inevitably, whatever stimulus measures the government puts in place, this is going to harm the hospitality, leisure, and retail sector very, very badly. You know,
You reckon? Yeah.
yeah, I do. I don't think you can. When you look at the margins these businesses work
Yeah.
on,
Mm-hmm.
which are quite thin.
Mm.
Restaurant margins are really thin. And if you shut them down before months, you can't get rid of all their costs. So all they do is build up a big debt. It'll be a very slow, painful recovery. There's going to be bankruptcies once the monetary stimulus ends. Once the furlough scheme ends, I think we're going to see, quite significantly higher unemployment. Um, right now, I still think we're in the phony war. Eventually, the chancellor has to face the music. You can't
Mm.
nationalize the workforce in perpetuity.
Yeah, you're right. And I mean, last time we spoke, we talked about we would speak again probably in about October time when the furlough scheme comes to an end. Well,
Yeah,
obviously we're
well,
here
it
now.
hasn't
It
ended.
hasn't
Yeah.
ended, has it? It was extended for a month, and then it's extended until March. And I must admit,
Yeah.
when I read that, I thought, oh dear. I mean that was before any news of a vaccine, I suppose, but it was obviously Rishi anticipating a pretty rough winter, I guess, and trying to keep things going. So again, we haven't really got a conclusion, have we yet? Because as you say, this phony war, it's going to go on until
Yeah.
March now, isn't it?
It is, yeah. So
Yeah.
we're not really going to get economic gravity taking hold until March. And so, just purely from my own selfish property perspective, it's a wait and see game now until March. I thought that it would be a wait and see game
Mm,
until sort of November, December, but now it's April, May before, we can start really assessing what the economic damage is.
mm.
And only once we've assessed the economic damage is it sensible to dip your toe back in
Yeah.
the water.
And the economic damage then, that's the fallout then of furlough schemes ending. So that's when the tide goes out. That's when the chickens come home to roost.
Yeah,
Yeah.
that's what I think. At the moment we've got a lot of QE going on. We've got
Yeah.
the furlough scheme. We've got bounce back loans and all
Mm,
that sort of thing going on. So companies are, companies are, and individuals are able to keep the wolf from the door, as it were.
yeah.
But eventually that has to stop. I mean, it's an exceptional state of affairs. Let's just focus on what we've got, which is um, effectively the entire private sector potentially being paid for by the government
Yeah.
until March.
Hmm.
And it would have been an entire year. There's never been a social experiment like this ever in history.
Yeah,
And if
sure.
you couple that with the restrictions on liberty that the government has introduced,
Mm,
I don't want this to become a political discussion, but it's very easy to conclude we now have an authoritarian socialist government.
mm, 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 mm.
And that's an exceptional result when you think we all voted for a conservative
A
government
conservative
back
government,
in
yeah,
December.
yeah. But do you think there's like a rise in like an anti-free market sort of capitalist tone generally?
Well, I mean, I think that we were still recovering from the aftershocks of the first credit crunch
Mm,
because the policies used to address the problems created by the first credit crunch exacerbated, the difference between the haves and the have-nots. QE effectively bails out the rich. That's what QE does. It bails out the well-off. People who've got assets, people who aren't reliant on, going from hand to mouth, as it were. So anyone who's got capital assets, shares, property,
so it benefits them because what it inflates their asset value.
It inflates their asset value.
Yeah.
But if, like the vast majority of the populace, you're living from one salary check to another, and all you've got is what's in the bank, that's actually been devalued.
Yeah, of course.
That's been devalued. They've hit the value of cash. So what happened with QE is the populace saw those people who were responsible for creating the credit crunch, if you like, first time around, got rewarded.
Yeah.
The banks, obviously, being at the first, right at the front of the queue, they got rewarded, bailed out, and everyone else was it's not good for a podcast to use swear words, but everyone else was kind of
in the trouble.
Sat on is the word I'm looking for. And so I think capitalism was broken as a result of the first credit crunch, and Osborne never got it. He never took steps to correct it. We're making the same kind of mistakes again. And by the way, I don't think the solution comes from taxing the rich either. The solution has to come from more progressive policy of growth. This leveling up that Boris Johnson keeps talking about, that's a critical component, I think, of righting the unbalanced ship that capitalism has now become.
And do you not think, though, that some of these sort of money that's gone into businesses and small businesses in particular, I mean, okay, some will probably use it to literally stay afloat, but some will invest it, won't they? And
some will. There will be some winners that come out of this. Absolutely. This is not all, a negative thing. There'll be some who will blatantly exploit it. There'll be some who don't deserve support, but will take it. Sainsbury, for example, and the other supermarket operators who've had rate-free holidays while they've actually been coining it as a result of the pandemic are going to come out as winners. They're not small businesses. I mean, actually, the big corporations, again, it plays to the breakdown in capitalism. The big corporations will probably come out of this relatively well because their smaller brethren will be wiped out. The bigger corporations have had the same support levels that their smaller brethren have had. And they'll become sort of mini monopolies. And so I think the big corporations are going to be winners. There will be some small businesses that win, but they'll be rare. And there will, of course, be charlatans who just exploit the system, and they'll make money at the expense of the government. And that's bound to happen. You can't have this kind of money sloshing around without someone nicking it.
Yeah, of course.
And, First Property Group, just for the record, First Property Group didn't furlough any staff, hasn't taken any government finance, has maintained its dividend to shareholders. And, I expect to continue to maintain our dividend to shareholders. I see no reason why we won't. And we will be good guardians and good members of the corporate world. We will pay our taxes as and when they are due in full, both in Poland and Romania, and in the UK. So I want to get that out there because we've had no rate holidays, no rent holidays, no government support, nothing. And we're still maintaining our dividend, and we're still doing better than our peer group.
Well, and that comes down to, you got quite a big cash balance, haven't you, from previous transactions you've done?
We have. Yeah, so we sold a very large property in April.
Yeah.
And that effectively turned half our market cap into cash.
Okay, yeah.
Just over half our market cap into cash. So we are very secure going through this downturn. Yeah. And also the properties we own, Mark, are recessionary resilient. We've mostly in offices, which are obviously hit by the pandemic, but nothing like shopping centers and high street retail, which was already in the crosshairs of difficulties. And to the extent that we've got retail, it's supermarkets and retail warehousing, which have actually done all right during the pandemic. Well, certainly not as badly as shopping centers and high street retail. So our property portfolio has been relatively robust coming through this pandemic. But we are still in property, and property is in the storm. Because once that economic gravity hits, tenants are going to find it difficult to pay rent, and there will be bankruptcies, and those bankruptcies will knock on into banks. And so you will get this domino effect, which will hit the commercial property sector, once all that stimulus ends.
So before we get onto that point, let's just stay on first property for the moment. What is the strategy there then? Are you very much sort of sitting and waiting until March to sort of see what the fallout is?
Yeah, so we're always looking, Mark. We're always looking for good deals. That's, we're opportunistic buyers of property. So we're looking, but we are very aware that buying at this stage before that economic gravity has taken hold could be dangerous.
Okay.
So we're not rushing at anything. We're just, we're looking, investigating. If a good deal turns up, we'll definitely do it. And we're working on 2 or 3 good deals. But we're not going to, buy plain vanilla sort of property in the expectation of a market rebound, because I don't think we're there yet.
Okay. And this economic gravity then, what does it entail? It's unemployment, it's people being made redundant, unemployment, it's people not being able to operate their businesses or continue their businesses, and they've taken on more debt. So you start to see high unemployment, bankruptcies. Is that the sort of reality you're going to see on the ground?
That's what I think is likely to happen. I mean, I can't be certain, but that's, I think, is, if I was a betting man, I'd put money on that. And with unemployment comes a reduced demand for space. With a reduced demand for space, rents fall. So you get a kind of double whammy as a property owner. You get tenants going bust, which is an immediate vacancy, and then difficulties in replacing them because all tenants are under pressure. The economy is under pressure. And so as rents fall, capital values fall as well. There is a silver lining here, which is QE and 0% interest rates, which may be negative soon. And those 2 factors will buoy property values. So we might find that the value destruction isn't as bad as, I fear. That value destruction may be quite muted, actually.
Okay.
That people just learn to live in a much lower interest rate environment. And this comes back again to those of us who've got assets being bailed out.
Yeah, okay.
In a sense, what the government is doing is bailing out property companies.
Yeah.
And, I'm not wishing to bring down the wrath of government on our sector, but, that is the net effect of what they're doing.
I mean, that was my next point. It was, do we see like a crash at a pretty terrible time where you have a deflation environment, and you have equities dropping and commodities dropping and assets dropping, or like you say, just acutely then just buoy it up, and you'll have the smaller sort of businesses and the sort of people going off to the wayside, but the rest of the bigger sort of market actually continues to function.
Exactly, yeah.
And in terms of sort of asset prices, I mean, do you have an opinion on where they might go? I mean,
well, it's hard to tell. You've got these 2 opposing forces.
Exactly.
You've got economic gravity pulling them down, and then you've got QE pushing them up. And that's the imponderable equation. Where does that settle? I think you can reasonably conclude that the government and the Bank of England will not allow a complete collapse in asset values, because it would be a disaster for the economy. So I think you can reasonably conclude that to the extent that economic gravity hits, it will be there'll be an equal and opposite support from QE and low interest rates. Okay. But, it's never perfect. It's never a perfect balance. So I just want to see where that ends up before we jump into the market in a big way.
Yeah, sure. I mean, this morning I was talking to a macro economist who has a very strong view that sort of his headline is gold is dropping to $800. Long term, he's bullish gold, very bullish gold, but he sees that in the short term, and to be fair, we had this conversation 6 months ago, and he said in 6 months, and he's sort of saying 6 months again from now, that we're going to have like this deflationary bust where it really does come home to roost, everything, and you're going to see rush to liquidity and strength in the US dollar, and that is then a bottom, and that's kind of what he's waiting for, if you like, to then jump in on what effectively would be very cheap, cheap assets, cheap commodities, cheap like mining exploration companies, and a cheap precious metals price. But I mean, you don't see that happening then. You don't see.
I don't agree with that. I think as far as minerals and commodities that are actually used in industrial processes are concerned, yes, we're going to see a reduction in their value because the world economy is going to be operating at a subpar level, and the need for these inputs are going to be lower. But as far as gold is concerned, I'm afraid I don't agree with him, because as they print money, the value of gold necessarily has to stay high. So I don't see gold collapsing in a hurry.
Yeah, I mean that is, I think, where he stands out as being perhaps a sort of a lonely voice in this. But that was what he was saying before we would then move into a high inflation environment, or even like a stagflation environment.
I mean, I think if you see interest rates suddenly go up because you've got inflation in the system, even though you may not have demand, then you might see all sorts of funny things happening. But we're not there yet, and the central banks would be very, very reluctant to raise interest rates. Everyone's carrying a massive amount of debt, including the government, and they know that that's like Armageddon if they get that wrong.
So you don't see, you said this last time, you don't see us being able to escape from low interest rates for a very long time.
No, I think we're trapped. We're trapped in a low interest rate cycle. Well, even if we get inflation.
Yeah, I mean, again, so this economist I was speaking to, he sees that as, well, at some point you have to call it when you look at the debt, and you call it by, well, debt eradication, and almost like a rebasing, if you like, I suppose, of currencies against something. And we sort of mused on something that was coming out of the ECB a week or two ago, where they were sort of having a consultation on a digital euro. And there was maybe some theories going around that would be valued against whatever, What do you think of that?
Well, I think the ECB would love a digital currency. It gives it much greater. All central banks would love a digital currency, as long as they're the ones controlling it. What they don't want is Facebook and other people producing their own currencies, Bitcoin, etc. But they'd love a digital currency because they can then force consumers to adopt whatever their interest rate policy is. I mean, there is an escape at the moment from negative interest rates simply by holding cash under your bed. You can actually literally hold cash under your bed, but
and don't keep it in the bank. You mean?
Rather than keeping it in the bank, where you might suffer negative interest rates. And if they can go to a complete digital currency, actually, then there's no theoretical limit on how negative you can go.
True.
At some point with a physical currency, there's a limit to how negative you can go, because eventually everyone will say, well, screw that. I'm going to take my money out of the bank and I'm going to keep it in briefcases or in a safe or whatever.
But would you see the extreme thing of almost like a debt write-off and a almost a collapse in fiat currencies and a rebasing?
I mean, that's what they want. That's what central banks want. That's what they want. And, I hope that's right. I hope that eventually you get to, just from First Property Group's perspective, from my own personal perspective, obviously it's very helpful if debt is devalued because asset prices keep going up as a result of QE. That's what they want. But I think the government has to do more than just inflate asset values out of this. They've got to come up with genuine pro-growth policies which get GDP and GDP per capita and productivity in this country marching forward at a pace. It's got to get all three going forward.
Okay.
And, they've tried to get GDP going, but they've had sort of unbridled immigration. So productivity has been low and GDP per capita has been pretty low. And you've got to get all three moving in the right direction. You've got to get the average Brit richer. That's the only way out of this. And if the government is serious about this levelling up exercise, that wealth has to spread across the UK. It can't be concentrated in the hands of property owners and investors in London. It's got to get out. So we need a pro-growth strategy. And I think, unfortunately, I've seen nothing out of the government on how they're going to achieve that. In fact, I see the government beginning to fall back on what they think is conventional fiscal rectitude, which is, raising taxes now. Raising taxes now would be a disaster, because what you would do is absolutely nail any nascent economic recovery. The businesses that are already nursing larger debts and having to cope with all the ill effects of lockdown would then have to pay larger taxes. Can you imagine?
Yeah.
That would be horrendous. And, whether it's personal taxation, however which way they want to go about it, eventually it's the private sector that picks up the bill.
Yeah.
Either through reduced consumer demand or through direct taxation on the private sector. So the government has to be very, very shy of raising taxes. Right now, they need to think cleverly about how to get GDP moving forward, GDP per capita and productivity. Those are the three key things the government should focus on. And I don't see any focus on it.
Okay.
Not yet, anyway.
So tax raise is now a bad idea. I know there's a conversation that's coming out from the Chancellor, maybe that capital gains is going to be increased.
Bad idea. What's
soon.
The point?
Yeah.
It would achieve nothing. It would achieve absolutely nothing other than tax avoidance.
Yeah.
That's all it would prompt, is tax avoidance.
Yeah. Okay.
It would achieve, but what he should be doing, actually, and this is counterintuitive, but I'm absolutely convinced it's the right way forward, is he should be reducing taxes that are levied on turnover or on acts of doing business. The latter being the most pernicious form of taxation. So for example, business rates on properties should be slashed and should be kept low, because that's just a tax on doing business. That's a tax on turning up to your office to do business. And that needs to be reduced. And then tax on turnover, such as VAT, stamp duty, tax on fuel, all that kind of thing needs to be reduced as well.
Okay.
So that the consumer feels better off, so that businesses, and spends more, gets money moving around the system. That, and that's going to hurt the exchequer to start with.
Yeah.
But it'll be a much better medium to long-term result, because you'll get the economy motoring forward.
Yeah, and you have that, you up that productivity in GDP, which is what you refer, and then taxes can come later to effectively
taxes come
take
later.
Out all the QE that's been put in.
Absolutely.
Okay. Well, that's good. Have you ever? I know you were an MEP. You don't fancy going to Downing Street, do you, Ben?
No, I'm waiting for the invitation.
Fair enough.
I don't think it's going to be coming anytime soon.
No. So why do you think the government aren't doing it? I mean, is it because they're scared of debt? I mean, I know as a normal consumer, people are very sort of worried about debt, aren't they? I think generally people don't like having it. I know the attitude is perhaps less of a concern than it was in my parents' generation, for example, but generally speaking, people don't like it. So do you think the government suffer from that kind of thing where they... Because Osborne got fixated, didn't he, on reducing the deficit?
A lot of the trouble that we're now experiencing from capitalism was Osborne getting fixated on the level of debt.
Right.
But to be fair to Osborne, we went through a paradigm shift in 2008. It was the first time QE's been used, by a mature Western democracy. And I think he failed to realize that actually QE is not the end of the world as long as you're doing it when all other major economies are doing it. You'll only come unstuck with QE in a big way if you do it out of step with the US and out of step with the Eurozone and out of step with Japan. Yeah, because people will look at your economy and go, well, your debt's going up, no one else is.
Yeah.
So they'll trash your currency, in which case you'll find it really difficult to finance yourself as a country. But when the US is doing it, when US debt levels are rising, Japanese debt levels are rising, Euro debt levels are rising, it's fine for sterling debt levels to rise. And it's not just fine, it's necessary. It's actually necessary. The private sector's taken a huge hit. And so the government debt level has to go up while the private sector gets itself going again. And they shouldn't be so nervous about the absolute debt level.
Okay.
The only way out of this, Mark, and you can quote me to anyone you like, the only way out of this is by growth. It
Okay.
is not by austerity and cutting back debt levels.
Okay.
There, down that road would lie economic self-harm of unparalleled levels. You've got to grow yourself out of this problem.
Okay. Okay. And aside from the tax sort of reliefs you said there, what are the sort of incentives or perhaps programs do you think you could reintroduce to encourage productivity, innovation?
Yeah, so there's a huge amount that the government should be doing. And again, I don't see much of it, sadly. In good economic times, governments use regulation to craft particular social aims. So they'll use regulation to make businesses behave in a certain way for the greater good of the nation. Right now, when businesses are on their back, they should be cutting back regulation. They should be deregulating in a big way. They should be deregulating the planning system so construction can get going faster. They should be deregulating employment law, which counterintuitive. When you have a very rigid employment law, you actually get employers reluctant to employ because it's difficult to then get rid of people. So we need more fluidity in the employment market, and that comes from deregulating employment law. We need to deregulate some of the laws which govern, bank capital adequacy ratios, how they're determined. MiFID needs to be ejected. All these regulations which constrain behavior and make it more expensive for businesses to operate need to be ejected or need to be pared back, at least right now. And again, I don't see any of that out of the government. In fact, the government is doing something very wrong, in my opinion. Boris Johnson is banging the green recovery drum as if that's going to get us out of the economic malaise that we're going to encounter once furlough scheme, et cetera, ends. And it won't. A green recovery is a contradiction in terms, because green initiatives, by definition, require higher taxation and higher regulation. And so this is not the time in the economy for us to be, going down a green agenda. This country, by the way, pollutes very little anyway. We're actually, I won't say we're clean as a whistle, but we're a hell of a lot cleaner than many other countries. And he shouldn't be punishing British businesses and British consumers with a green agenda right now. He should be paring those regulations back.
But you think he's doing this perhaps because it's popular? Or it's
popular
in vogue?
It's popular amongst the people the Prime Minister has dinner with.
Okay.
It's not popular anywhere. It's not popular with the electorate.
Right. Yeah. Sure. Okay. Well, that was good. I mean, we can have a few last minutes on some of your favourite subjects if you like.
We've done quite a lot of them.
Yeah. Well, I mean, so COVID. You're very you. Yeah. I mean, I see you on sort of Twitter a lot about COVID. Where you sort of say, we're completely overreacting to this. The government is doing massive harm for absolutely no real reason.
Yeah, I think that's right. I think that they are absolutely intolerant of any form of risk. And their risk aversion has got to a point where even one hospitalization is one too many. What they've lost sight of is that it's not government's job to keep the entire population healthy. It's government's job to ensure that the essential services can cope with any fallout from the virus, to make sure that the NHS can cope. And only if the NHS is really threatened in its ability to cope should drastic action be taken. And we're nowhere near that at the moment, nowhere near it.
Okay.
And the Great Barrington Declaration, I don't know if you've heard of it or read it, Mark, but I highly recommend it. It's written by 3 first-class professors of epidemiology from Oxford University, Stanford, and I think Berkeley was the third one. But it's been signed up to by something like 4,000 academics from all of the top universities across the world, perhaps with the exception of Imperial. I didn't check whether Imperial Colleges signed up, but they seem to have they're ploughing their own furrow on COVID. And the Great Barrington Declaration is very simple. It simply says, a shield the vulnerable the elderly and those with pre-existing conditions, and allow the rest of the economy to get back to work. And avoid this economic devastation. And the government refuses to take that message on board. And this is something that's been signed up to by a hell of a lot more scientists than they've got on Sage. You should read it. It's a fascinating document.
And why do you think that they're doing that? Is it because risk averse and just scared of having blood on their hands?
Yeah, I think it's twofold now. I think initially it was risk aversion that prompted them to take drastic action.
Yeah.
And now that they're so politically invested in the lockdown and the way that they've behaved, that it's very difficult for them to reverse out of the cul-de-sac. Boris Johnson has used military metaphors repeatedly in his life as a politician, and he's continued to use them as far as COVID is concerned. So he keeps talking about defeating the virus, and it sends out completely the wrong message, because you can't defeat this virus. No. All you can do is learn to live with it.
Yeah, exactly.
And if he'd been more careful in his choice of words, he'd have an easier job now formulating policy.
I think that's the key thing. You can't defeat it. You have to learn to live with it.
You have to.
And it's like, I was reading the other day in the Netherlands, it said we're over the second spike, but it's kind of laughable, because it's like, well, what does that mean? Because there's going to be a third spike and a fourth spike and a fifth.
Absolutely.
It's going to keep coming every year, isn't it?
Yeah, you can't panic every time you see a spike.
No, exactly.
And it might be mutating. Everyone's putting their hope on a vaccine. Well, I've been reading about a number of mutations, which I'm sure you've read about, something in Spanish farms, which was a new form of coronavirus. Then they're having to kill 25,000 minks or something in Denmark because they're carrying a new coronavirus. Well, if there's a whole lot of permutations taking place, no vaccine's going to capture that.
No, absolutely.
We have to learn to manage this thing. What we really want, actually, is for the virus to spread very broadly without any major health hazard as a result of it. And every time there's a large number of cases reported, you hear the government panicking. But actually, large number of cases without hospitalizations is brilliant.
Yeah, exactly. Yeah, no, it is. I remember when I saw that about 3 weeks ago, I think the Netherlands was the worst in Europe, and I thought, that's good. I can get through it quicker. So I guess, Ben, the next time we speak will probably be 2021, I imagine. So that's obviously after Brexit, if it does happen, another subject that you're very vocal on. So how do you feel it's going? I mean, what's going to happen?
Brexit is going badly.
It seems going badly, doesn't it? I mean, the government are in a mess, aren't they? They've had some resignations I've seen this week.
Absolutely.
So what's your view? Are we going to have a deal? Are we going to have no deal? Or
we're going to have a deal.
We are.
The government can't afford not to have a deal.
Okay.
Every step of the way, it's shown its reluctance and indeed inability to walk away from the negotiating table. So we will get a deal, and it'll be a deal, unfortunately, that ties us closely into the European Union. And I say unfortunately because it will prevent us, therefore, from deregulating in the way that I mentioned earlier, that our country should be deregulating, cutting taxes. We can't cut VAT in this country below 15% without EU approval.
Okay.
So if they have that kind of control going forward, we won't be able to craft policies and taxation policies for the United Kingdom that are pertinent for the UK. And all I see is Boris Johnson signing us up into something very close to the terms of the political declaration, which is a level playing field with the EU, fixed fishing quotas, the European Court of Justice having a special position in British law, etc., etc. And I think that's all bad for the UK.
Because they're the sticking points I keep reading about. It's always those things that come up all the time. Do you think the UK will be better off than just doing a no deal? I know it will be short term. So. You think it will be for the short term?
I think there won't. If you had a competent government in charge, there wouldn't even be any short term pain.
Right.
What you would do as a government, if you were competent, is identify those industry sectors which are vulnerable to, tariffs, vulnerable to cycles of supply that involve the European Union, and you would make grants and loans and special subsidies available to protect those industries, to support those specific industries in the specific ways that they'd be adversely affected. And Um, and that's what we should do. But we haven't done it. The government hasn't prepared for no deal. This is the big problem.
Yeah.
They haven't prepared for no deal.
So they're not going to risk taking it.
So they can't risk taking it because actually they've got no vision of a post-Brexit Britain.
No.
They've got no planning, and therefore they've got no implementable plan. And so they can't execute anything. And so they have to do a deal.
So completely incompetent.
I'm afraid they are completely incompetent. Yeah.
Great. Okay. So maybe we won't see a nice levelling up then, as we said before. If we're not able, if the UK is not able to, it still has to abide by certain rules and not, the master of its own destiny. Okay.
There's no chance of a levelling up. And I just want to remind you, this furlough scheme, which has kept the wolf from the door, actually has hit the north much harder. At the average wage in the north is much lower than it is in the south, and Wales and Scotland and Northern Ireland. And when you take 80% of the minimum wage, you're at your sub survival level.
Yeah.
And so the first step this government's actually done in office is not levelling up; it's actually clobbered the poor.
Yeah.
I don't know how they're surviving, a lot of people.
Yeah. And then what happens? Is there some kind of civil unrest because of that? I don't, maybe it comes.
And right now they can keep a lid on all of that because we got this authoritarian regime.
Yeah, exactly.
Sorry, I'm beginning to sound like a conspiracy theorist now, so I'm going to back off from this line of discussion.
No, I don't think it was conspiracy at all. It was. It's a good, nice chat there. Yeah, we covered a lot of things. It's always nice to get your insight on things.
Well, thank you, Mark. It's a pleasure. Very rarely am I given an opportunity to just vent.
Well, you can come back again in the new year, or maybe March. If the furlough scheme is definitely ending then, and we can look at the fallout. That might be a good time, or maybe some kind of Brexit. If something interesting happens there, maybe we can touch base again. But thank you, Ben, and I wish you a nice Christmas, I guess.
Yeah, and you, Mark.
And
let's hope we can have it outside of lockdown.
Yeah, I hope so. All right. Thanks a lot, Ben.
All the best. Thank you,
Cheers.
Mark. Thanks.
Bye-bye.
Bye.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell.